So let's begin first by looking at some questions that were earlier sent to us. When we sent the invites, there were quite a bit of questions that came in. So we're just trying to be able to pool similar questions together so that we can take a greater number of them together. And so let's begin with the first one. All right, so it says, we registered a low last 2020 and the PSE never went back to that low. With global issues we are facing, will the PSEi have a new low? Okay. Well, of course, the situation in 2020, of course, looks quite dire, and that will, of course, recast the index back into quite a bit of weakness. Now, I would say that perhaps we would say that maybe a 60 or 70% chance of not doing that. I think we can try to contain ourselves from this. Although the US might be going into a recessive type of situation, I think the Philippines was playing catch up in terms of what we did in terms of our economic situation. Now, I'm not saying that we're doing better than the US, but if you were to look at direct GDP, it looks like we are. But remember, we now have a big debt problem to be able to hang on to and try to address. And we just have a new administration coming in, and they have to lay out the new plans. And people probably want to stay in the sidelines and watch what's going to about to happen. So now we're seeing all this pressure come in because of the Ukraine war, higher inflation, high oil prices, and of course the declines into the US. And that means that, like I pointed out earlier, I would expect the PSEi maybe to come back into the lows that we've seen, maybe only into the last few months, maybe not all the way back down to where we've come through into that pandemic low, because that was really an unusually weak situation. So there are some other sub-questions we have here. Did it say that will we be coming back to 6, 8, or 7,000, or will we persist in revisit the 2021 low? That one, yes, potentially that can happen. The rally to 6, 8, and 7, if that's going to happen, that would take a major rally to get us out of what we're currently doing it. But like somebody's asking, could their PSEi show a potential bottom? I think there could be an interim bottom before the end of the year, yes. But again, I would only look at that as an interim rally. Okay, so we have yet to be able to pull out of the major decline that we are currently in. So any recoveries we're looking at now will probably be an intermediate or temporary for the time being. It's only that we see a downtrend line break that we can cast otherwise. Okay, thank you for this. Can we have a second question, please? What industries do you think will remain resilient or outperform its peers? Well, I think right now it'd be very difficult to try to make an assessment of which one is going to be resilient, because if you mean resilient as if it not going down as against some going down, I think we're probably going to see it'll be hard pressed for us to be able to see that. But if you start to be able to look at perhaps the telcos could be have its own potential, assuming that they could do it, particularly PLDT. Then we have there could be possibility that maybe some banks could be able to help out because they weren't as weak as the rest. But like I said, we'll probably see corrections, but hopefully not see as elevated ones as we would see in some others. So those are the ones that we'd probably come out with. And I would suggest that you look for the double base patterns in many of these ones first, because unfortunately I showed you all the sectoral charts earlier and they're all pointing in the same direction, all heading down, all coming off a major rally situation. So I think this looks like this is going to hit us quite broadly. So be very, very discreet when you try to do that. Don't just buy a basket. You might really have to be able to pick out stocks one by one once you see that there's an element of resurgence coming in your direction. Okay, can we have another question, please? Okay, so here we have a question that says, what is the best strategy to do during the market decline? Well, of course, I mean, there's two things you can do, like I pointed out earlier, right? I mean, if you know the market's going down, I guess the safe bet is to be able to stay out or extremely light, right? And When I will decide to come back is only as a matter of where I see the market is now extremely oversold, and I'm looking for that potential where it's gone all the way back down to the lower end of a down channel, and a potential oversold rally for it to rally back to the high band of the channel can be shown. In which case, that's the only time I will even dare take a shot to buy an oversold stock for a potential rally. Normally, technicians don't like taking trades like this because normally they say your trend is your friend, and if the trend is down, that means I normally have to stay out. But in a bearish swing, this is the only way to be able to try to be able to rejuvenate some of the positions that was lost or in terms of equity value. And if you're going to see an oversold situation, especially coming off a wave 5, which is a capitulating wave, sometimes the short-term gains of a major rebound can be quite remunerating. So perhaps in this particular time, it's something that we want to be able to look for a potential rebound of an oversold situation coming off this wave 5 type of situation. It's either that or you wait until the market can one day break through their downtrend line, and only then they tell you that finally the worst is off and now the market will slowly start to build itself out of this. Why slowly? Well, normally downtrends don't just turn on a dime and just go lightning back up, right? It takes time to rebuild people's confidence in what they're investing in. It takes time for these corporations that are now getting hit by all these problems to be able to restore themselves. And that's why we'll probably see more of, after the first rally surge, you'll probably see a pullback, and then a more gradual type of movement will come in after that. Okay, so we took this first advanced questions and some of that, so just so we can get a sense of what people are looking at, and perhaps we can take into some of the live questions that were sent to us when we presented our opening in today's session today. So perhaps we can have a look at some of the questions. Okay, how much cash position should we have during this situation? Okay, thank you, Ruben. Well, I think you'd have to be able to keep yourself in greater cash than position. And again, that depends also on whether you're talking about in a personal situation or if you're in a portfolio type. Because, unfortunately, I'll keep myself in a portfolio and I can be diversified to try to curb some of the weakness of the market. But in this particular case, since everything's all coming back down, it doesn't seem like, no matter how how broad your position is in terms of you being covered in a wide array of issues, you're still getting hit by quite a bit of stocks. So I would say that maybe I'd like to be able to stay on the light side and a greater portion of my portfolio first in cash until I can see an oversold situation, in which case I can revert back maybe back to a 60-70% backward position, or maybe slightly more, but again, just for the rally situation. But into a decline, the best way to protect your value is just simply staying as cash rich as you can. So whatever you can stay in cash into a decline would be the best until it's time to trade an oversold rebound. Okay, thank you for that, Ruben. Next, please. Do you recommend buying stocks that show relative strength compared to the index? I would say yes, and maybe to the other people who are trying to understand what he means. Rainer is suggesting that, for example, if the index goes down, let's say 10%, as against to another stock that only goes down 5%, would I look for a potential buy into that stock that only fell 5% as against the index, because the index showed you more slipperiness? And I would say yes. Now, the only difference is this: will you get a bigger rally in that particular stock? And the answer may be no. And the reason, because more likely that stock that had showed the higher relative strength may not be able to show a very big whip up in terms of the corresponding rally. It might not fall, and that means if you're looking at risk as your primary objective here to contain risk, then yes, you are doing the right thing by staying in those issues or buying those issues. But if you're looking for a potential big whip back in terms of a rally from an oversold condition, it's quite possible you could see some stocks that fallen maybe equivalent to an index, maybe even more, and try to be able to show you a bigger rally in that. But please, it doesn't mean that is a better buy and stay long from it, okay? It means that from an oversold situation, you buy it quickly, and if it rallies for 2, 3, 4, 5 days, that's it. That's all you're doing for. And maybe you'll probably get a better profitable trade rather than buying those stocks that have better relative strength compared to the index. So thank you, Rainer, for that question. I mean, I hope that people understand the difference. Next, please. Do you have a recommendation for REITs? Okay. So yes, I think the REITs have been quite hard hit, right? And I think the reason really because of that is really because it's fighting something. And if you see interest rates starting to climb, then the positioning here is you're taking risk to buy a stock that gives you a dividend. However, you've got interest rates out there starting to climb up, which could narrow the potential, difference between the selling factor of that REIT as compared to the interest rate product. And I think it's really because of that we're seeing some weakness into it. Because if you were to look at the trend of some of these REITs, you'll probably be able to see that they're actually starting to be able to pull back, just like many of the other issues have. I'm not sure if we do have, guys, would you guys have any REIT samples there that maybe we can show if you do have one? Okay, so here's, for example, is of a REIT and Phil REIT. And so if you can see the picture that was placed in the chart, again, it looks quite similar. You have downtrends, you have patterns that are only rallying slightly. In the case of Philinvest REIT, just going sideways and now even threatening to be able to break through the previous low. So they seem to be mimicking what the rest of the market is doing. So I can't tell you that this is a good shelter for the market. Although, yes, perhaps you might be able to give a little bit more of a dividend payout at every payout schedule. Maybe that could be your consuelo if you wish, but the deterioration into the market value is something that you'll also have to be able to deal with as well. So I think right now you'll still be in the same boat. There could still be some existing weakness into the stocks as well. Okay, thank you for that. Can we go back to the next question, please? So currently, is it better to buy PSE ETF during pullbacks or buy individual liquid blue chips? From Jude. Thank you for that question, Jude. Okay, if the objective over here is to outperform, then I would say that I would cast you to be able to look for individual issues if possible. If there are a couple of issues over there that are, doing stronger than the index and potentially showing formation stronger than the index today, then why get back into the index situation and buy the PSE ETF at that on a pullback? You could just look for more formidable issues right now and take it maybe one step at a time. You don't have to be too heavily exposed right now. Also, I'm a little worried about the PSE ETF because sometimes it can run quite illiquid. And, if executing this at the right price might be a situation, you might want to consider instead looking at an index mutual fund because we don't have any liquidity issues with many of them. So do take liquidity into the equation as well. But in terms of your question, I would say individual issues first. We can look to see if the index shows as a base, then maybe the index can be bought. I would assume you would buy it because you wouldn't know what other stocks to buy. And only in that case. Thank you for the question, Jude. Can we have the next one, please? Is accumulating a good idea as of now? Danilo. Okay, thank you for that, Danilo. I think you want to do this little by little because if we're going through a wave 5 situation, I think you'll get good values, but I can't tell you how fast you will be correct. And the reason is because we still have to come out to be able to fulfill what the entire corrective maneuver is going to try to show us. So if the accumulation is done over time, I would say yes, look at the issues that you think have been extraordinarily pressed. Like, for example, what happened in Ayala Land, I think that would have brought out a good opportunity because of that MSCI extraordinary selling. I think that would be an example. It fell all the way up to about, what, 27, I believe, or 27.50. That is something that you look at. There's some issues out there that could also be showing some value. So in those particular issues, yes, but like I said, remember, there is such a thing as value traps. That means they just look good, not too much liquidity. They could just continue to, submit to the pressure. And since there's not much buying coming into them, they could just exist sideways or gradually drift off into a decline. So again, coming from the question prior to this, be selective and do your accumulation into those issues that are showing resiliency or at least has not fallen too much so that you can contain your risk. But if you're looking for those that are going to give big movements of an oversold condition, you're going to have to wait for a big decline before doing this. And I don't know if you can accumulate in something like that. You're going to have to buy it into that big decline for a big bounce to come in. You may not have enough time to be able to do accumulation. After that, after the first big rally and it comes back and makes a higher low, that's the time an accumulation phase would come in. But this is a process of becoming, so we're not in that stage yet. So if you're going to do this, if you do have good values, do it very little by little. I would think that a greater chunk of your accumulation should come a little bit down the road. Okay, thank you for that. I'm a first stocks investor and 80% of my portfolio is down. What should long-term investors do during times like this? I'm sorry to hear that, Alexandra. I guess that this was really a timing issue. But remember, many of the companies that you have here, and if you are going to focus into long term, I think you're going to be seeing short to medium term weakness. So if you can survive this and you're really willing to be able to hang on to a position, assuming I'm taking that you're going to take a long term investment position, then I think you can sit through it as long as the names that you're buying into your companies are good names. Okay. If you were one of those that were taking pot shots at those small cap issues that were jumping up and down like a yo-yo, I think it's a good time for you to reconsider some of this. Remember, these companies do well only in bullish times. But when you come into bear market, they could take an enormous amount of time to recover. I've seen some of them take years to recover. So if you are in an index stock or even a medium-sized company that has been showing relatively good comebacks in the pandemic, I think you can sit through it. But like you said, this is a long-term program for you, and you might have to wait a little while before we see this thing come out of the conditions, because we're seeing something in the world market that we're going to have to contend with. It didn't matter whether you came in now or whether you came in early this year or you came in maybe even last year. I think a good chunk of people who started then will probably be showing similar positions to you. So you might want to extend that if you have good names in your portfolio, and switch them out if you are taking names that are of very small cap stocks that whose viability down the road might be a question mark. Okay, next question, please. What technical indicators do we watch for to determine capitulation has been reached? Okay, nice question, Claribel. Well, an oversold indicator would be a tool like the RSI. You could also use the stochastics, because some stochastics do have that. And another thing you can do is, if you want to be able to measure the difference between the current price and short-term averages. For example, if you're using a 20-day exponential moving averages or even a 10-day moving average, and if you see the stock price just zip very much lower than those moving averages, that can give you a good sense that that is an oversold situation coming up and that you could potentially buy that. By the way, when you buy an oversold rebound, please don't just buy it on the way down. wait for it to exert that effort. Normally, you will see it come down, and at the end of the day, you'll probably see it rebound a good chunk of what it lost. So that's the kind of exasperation you want to see. First, emotional, that's the capitulation part that you're talking about, and it hits an RSI level of below 30 or even below 20%, or same thing into the stochastics. Or if you're seeing already maybe monumental spreads to the moving average of a difference of 5-10% to the short-term moving average, and those are ridiculously oversold already, and you can go ahead and take advantage of them once you see that it seems to be a rally beginning. Okay, next questions, please. How far and long do you see wave 5 taking its course on the PSE index? 3 months, maybe? Okay, it normally takes time to generate these things, but I think maybe within 3 to 5 months is a fair assessment. Although, can a 3-month period come in? Yes, especially on wave 5s, because normally the tendency for them is to be aggravated. And you'll know the minute you start seeing, like, as if the price bands are becoming bigger and bigger and bigger almost every day, that's when you know that that capitulating stride will come in. And that's normally how the market will blow itself out on that 5th wave. So that's really what you want to see. I'm more, more than time, I would say magnitude would be the more important indicator here. Because if that happens in a span of 1.5 months, and I tell you normally 3 or 5 months, you might question it. So I would rather say magnitude is the more important condition here. So if you see the index fall back down a greater chunk of that magnitude right away, that is already the telling factor that you're coming towards the tail end of this particular swing. So I hope that makes more sense, Mike. Thank you. Next question, please. I'm fully invested already because I'm a medium-term investor. Do I still lighten and accept my losses or just stay invested? Thank you, Cheeto. Okay, again, this is an assessment of what you have. There are stocks out there, I think, that will probably prove to be resilient. And like someone earlier asked, if you're seeing that it's not falling as fast as the index, or maybe even slightly compared to the index, then maybe those are the ones that you can probably hang on to. Now, my worry is this. Let's say, for example, you see a stock, like some of the positions I showed you, you see them, they make a rally, and then they build a pattern, and then they just begin to break that pattern right now. So in cases like that, I think those particular stocks can still be lightened into, so that, in anticipation that you'll probably see maybe a 5 to 7% decline, or maybe more, that could allow you to be able to buy back at a lower price later on. Or it could give you an opportunity to be able to switch. Okay, I don't want to, part of what a trader has to understand is he has to be nimble enough to make the right decision and not to stay stuck because of an emotional decision. I know what it's like to sell a position at a loss. I hate it, right? And in the beginning, I could, it was very difficult for me to do. But when I realized that selling it now would save me more than what I would see on an incumbent decline, I had to teach myself that, that would be a better, more fruitful strategy for us. So you're trying to minimize the damage here. It's not that remember, you can always buy your stock back at the better time. And right now, if you just stay glued in there and not make the right decision to make sure that you keep your capital secure, right? Because that's what you're trying to do in a declining market, not lose more money. Then it might be the right decision to lighten into the position so that you can cap that loss and use that cash later on to take advantage of any of the capitulations that you will start seeing later on. And that's why lightening might still be the better course, especially if you're seeing patterns that are just winding up and only breaking down now. So in those particular cases, I would say it might be better to be able to lighten so that you can save some and have enough capital to be able to take advantage of any capitulating swings on the decline. Hard decision, but a wise one. Next, please. Year-end target for okay, Jeffrey. Here we are all trying to be able to figure out where the market is going to base, and we're looking for year-end targets. Well, I know we started the year looking at very promising numbers inside, but clearly all that changed. We have a war going on in Europe taking place. We have high inflation, interest rates are going up. The floor, the rug on the floor seems to be pulled over our feet. So, we're trying to see, how far the decline would last in terms of magnitude and time. So right now for 2022, given that we haven't changed anything, I think it might be a little difficult for the market to rally back to about 7,500, right? So between 7 and 7.5, that could still be a questionable impact. Right now, we just hope that the market manages to be able to stay sideways rather than going too deep into the downside, in which case we looked at maybe hopefully maximum of 6,000 at the weekend. I think I put 6,000 or 6,200 to about 5.8 at the worst, right? So hopefully that's your low side. I hope the upside can be somewhere between 7,000 and 7,500. Okay, next question, please. Any recommended books to be a better investor? Oh, okay. Well, there are a lot of fundamental books that you can buy to be able to look at that. Of course, there are Bibles of a book in investing. Of course, Benjamin Graham comes to mind. It's telling you how to be able to become an investor. But I hope you understand I'm more of a trader, so I'm more of a technician to trade. And so, I'm looking at books for like maybe a combination of both for you if you're looking for something like that, like One Up on Wall Street, a little bit old book, but I think the principles are the same. There are a lot more newer ones with younger people writing down that you might also want to be able to have a look at. But in terms of technical analysis, John Murphy comes into mind with his books. He's got quite a number of them. Just look at what his technical analysis books are, and you can look at that. In case you want a trading book about psychology, which can help you, especially handling situations like today, Dr. Alexander Elder, he has a book called Trading for a Living. That might be able to present some situations, because sometimes in cases like this, some emotional help might also be necessary, because, losing can sometimes be emotional, and to be able to make the right decisions might necessitate you to go over that emotional impact. So have a look at some of the books that he has as well. Okay, so we may have gone over our time limit for today. If you are still writing a lot of questions inside them, I will take them all and I will attempt to be able to answer your questions, and we'll make sure to be able to send this back at the forum that you guys can all reach, so that I can take your questions and answer them personally. I think it's very important that we continue to be able to engage you even through difficult times like this, because this is a time when, of course, you would probably need us more rather than times when markets are so bullish, because you need to understand what's going on. So in line with that, I do appreciate you taking time to be able to stay with us today and listen to what we have to say. So in answer to that question, will markets continue to fall? It looks like they can. And because of that, we have to be ready to be able to run through our strategies in this kind of market environment. So what would our takeaways be from today's situation? So I said earlier that we might be able to see some rallies into the market, but I would suggest you guys staying light. I think if you can bring your cash position up first while this corrective volatility is in place, and do so, and look to be able to sell rallies that come towards to resistance. Lighten in those areas. If you don't want to do it now because it's maybe too painful for you, then wait for the rally, and in that rally, that's the time that you attempt to be able to do that. Second, this is the time to start watching for potential basing out patterns, especially if you're coming through a wave 5 situation, because if capitulation comes in, you're going to see, quite a bit of drops that come inside that look quite emotional. You see a heavy sell-off that come in. You have to be ready to take advantage of those things because the counter rallies from those things can be quite profitable. And like I said earlier on, when you start seeing them, normally they will take maybe 1, 2, 3 days of big amounts coming one day after another. And you'll probably feel yourself taking a gasp looking at that. That's when you know that that emotional stride is pushing the market down. It's not the fundamental value anymore. It's just what people are feeling. And that's the reason why an oversold rally like that normally brings out a good amount of rally space, because you're just trying to get prices to revert back to what it should be priced and not what emotion drove it to. That's why we want to take advantage of some of these capitulating swings. But third, understand that these oversold rebounds are temporary and they will offer you the ability to trade and maybe make little money in times like this. But remember, you're coming into a fifth wave. We still have to get out of a bear market, and that takes time. And companies have to be able to show us that they are resilient enough to be able to start getting out of this situation. Remember, interest rates are still climbing. Inflation is still climbing. Markets have just recently broken. So I can't tell you that we're waiting for capitulation tomorrow. This is a process of taking its course. So in the interim, if you see any counter rallies that come back closer to resistance, that's the time where you sell it there, lighten it in that area there, and then wait for the capitulation or the basing formations to come in before you come into the market. If this market is going to make a reversal, we will hold another session like this to be able to tell you that we feel enough is enough and that the potential for that accumulation some of you were asking is time to come in. All right, but for now, temporary rallies you can trade on oversold conditions, sell it in resistance. When it comes back down, if we notice the reversal potential, we will inform you of its potential as well. So with that, we bring to a conclusion today's event. Again, I'd like to thank everybody for participating. And we hope to be able to see you again into our next expert huddle. We hope things are a bit better during that time. But, like I said, good guidance in timely situations couldn't mean anything. And I hope that you've managed to be able to learn with us again today. Thank you again for attending COL's Expert Huddle.